Hello and welcome to the fifth video for Chapter 6. This video is going to discuss the American Opportunity Tax Credit and the Lifetime Learning Credit. Alright, we're going to start on page 630 and work our way through to page 637. Okay, the American Opportunity Tax Credit, which was formerly known as the Hope Credit a few years ago, is the credit that most of you would take if you're eligible to take it on your tax return. If we pull out page 2 of our 1040 and we look at line 50 and line 68, okay, these are the two lines for the American Opportunity Credit and or the Lifetime Learning Credit. The American Opportunity Credit, like the Child Tax Credit and the Earned Income Credit, is a refundable credit, but it's partially refundable. Okay, and again, there are certain guidelines for if it is refundable or not. Okay, remember our pecking order. Okay, so the foreign tax credit and the dependent and child care credit would come before the education credit, which again is on line 50 of Form 1040. Okay, the American Opportunity Tax Credit is for students that attend college, all right, during their first 4 years of college. So let's take a look at the rules at the bottom of page 630. All right, to be eligible, the student must be pursuing a degree. Okay, that is very important. Okay, if you are just going to like night school to update your skills at work, that doesn't count for the American Opportunity Credit. You have to be pursuing a degree. All right. You have to be enrolled for at least half-time for one semester during a year. All right, most colleges would consider that to be 6 credits. Okay, you received a Form 1098-T, all right, from the eligible institution. Okay, in many cases you would have received this via some kind of an electronic form. Like at Ivy Tech, you could go on to, My Ivy and download your 1098-T, all right, so that you could use it for your tax return. All right, top of page 632. You must not have completed the first 4 years of higher education. All right, in other words, you don't have your bachelor's degree yet. Okay, you couldn't have claimed it for more than 4 years. Okay. And you have not been convicted of a felony drug conviction. All right, that's a tough question to ask people, but you have to ask it. All right, just don't assume. All right. Again, I always like to keep in mind that the person sitting across from me wants me to be very diligent in my job, and again, they could also be, somebody who was contracted by IRS to see how well you're doing and see if you're doing your due diligence. Okay, all right. So yeah, it is a question you do have to ask. All right. Okay. All right. Now, the one thing you'll notice there is that if you are married filing a separate return, you cannot claim the American Opportunity Tax Credit. I've said over and over again that married filing separately is the worst way to file. All right, and there's another proof of that. Okay, and it also says the taxpayer is listed as a dependent on another tax return. Okay, so why is this important? All right, now this is something the author may not relate to that much in the book. All right, now let's say you get a couple in front of you and they bring along their 18-year-old son or daughter and they've just started college, and and they say, well, we paid out $10,000 out of pocket this year over and above any grants, for our child to go to college. And the first question I ask them is on whose return is the child being claimed on? because that's the return that the credit goes on, regardless of who paid it. This is very, very important. Regardless of who paid it. So, scenario number one, mom and dad claim their 18-year-old child on their return, okay, and mom and dad paid for the child's education. Mom and dad get the American Opportunity Credit. All right, scenario number two, all right, the mom and dad paid for the credit. The child files their own tax return and claims themselves as a dependent. The child would claim the credit on their return regardless of if mom or dad paid for it or not. Okay, the worst situation you could have here is if mom and dad paid for the education, the child went ahead and filed on their own anyways, and the child's income was so low that their taxable income was zero, all right, and therefore nobody gets the credit. All right, that is the rule. All right, I do get it a lot of times where, parents, they a little surprising. Now, here's another scenario that could possibly happen. It doesn't happen very often. But let's say mom and dad file their return and they claim their son or daughter on the return, but the son or daughter actually paid for the education expense. Mom or dad then get the credit. The credit goes on the return where the student is listed as a dependent or where the exemption is claimed. It doesn't matter who paid it. All right? It doesn't matter who paid it. Okay? So, counsel your clients. A lot of times kids get excited and they file their tax returns without mom and dad knowing about it. And then mom and dad go to claim the American Opportunity Credit and to find out that the kid claimed themselves. Okay, so mom and dad could still claim the credit, but the kid has to amend their tax return and take their exemption off of there. So it's if you do get that scenario where you're doing both the parents and the child's return, do the parents' return first. All right, do the parents' return first. Also, in case there's a kiddie tax involved, where the child has unearned income, you still have to do the parent's return first. Never do the child's return first. Okay? All right. Okay. So, it'll tell you at the bottom of page 632 what you can claim. All right? Now, remember that if you get a Pell Grant, all right, and the Pell Grant covers all of your educational expenses, then you don't get the credit. Okay, the credit has to be for money that you paid out of pocket with your own funds. Okay, now a lot of times I'll get a taxpayer who says, well, what if I took out a student loan? Well, that's your funds. Okay, and you take the credit in the year that you went to college. You do not take the credit in the year you started paying the loan back. Because first of all, you're probably not going to pay the loan back until the year, at least 6 months after you graduate from college. Okay, well, by then you probably wasted the credit because you can only amend your return for 3 years going backwards. So, you wouldn't be able to, for example, claim your freshman year if you did that. So if you went to college on a loan that you have to pay back, you claim the American Opportunity or the Lifetime Learning Credit in the year you went to college. You never claim it in the year you start paying it back. All right? Okay. So take a look at the chart, at the table at the bottom of page 632. It'll tell you what counts and what doesn't count as far as expenses go, and for which of the two credits it applies to. All right, the bottom line is the American Opportunity Tax Credit is for the first 4 years of your college life. All right, the Lifetime Learning Credit would generally be taken if you went back and pursued a master's degree or you pursued your PhD or something like that. Okay, so what is the credit? Well, if we take a look at our at the examples that they gave you in the book, all right, the you can claim a credit, okay, up to the first $4,000 that was paid out of pocket for your college education. The first $2,000, all right, would be claimed on line 50 of Form 1040. Okay, assuming, of course, that your taxable your taxes before credits are high enough to absorb your American Opportunity Tax Credit, then okay, you could put up to $2,000, all right, on line 50. All right, you could also possibly claim 25% of the next $2,000. So the total credit that you can claim is $2,500. All right. If the amount on line 50, all right, if the amount on line 50 is greater than the taxes before credits, then the remainder would drop down to below, okay, on line 68. All right, on line 68. All right. And again, the software will do this all for you. Now, this is all claimed on Form 8863, which is shown for you on pages 633 and 634 in your book. Okay, a copy of the 1098T is on page 635. All right. Now, what I usually do with my clients is this. Okay, what I will do is I will ask them, okay, did you have any out-of-pocket expenses over and above what would be on the 1098T? All right, if they do have some, then you'll record that. All right, but if they say no, I don't have any, then all you do is you look at the 1098T and you look at line 1, all right, or box 1. Okay, that's what the Bursar's office has said that they received for tuition payments. Okay, then you look at box 5. All right, if box 5 is greater than or equal to box 1, then the child cannot claim a credit, or the student cannot claim a credit. Okay, all right. Because that means that the scholarships and the grants, which were never taxable to begin with, have covered the qualified tuition expenses. But if box 5 is less than box 1, then the difference between those two numbers plus the amount that the taxpayer tells you that they paid out of pocket for things like books, okay, and parking fees and other things like that at their college, okay, you would take the difference. You would take box 1 minus box 5 on Form 1098T, add the amount that the taxpayer tells you they paid out of pocket, and that becomes the expenses for the American Opportunity Credit. Okay? All right. Okay, so that's the AOTC. The Lifetime Learning Credit, which is reported on line 50, all right, is used again after your first 4 years, or if you're going to college and not seeking a degree. What that credit is 20% of the first $10,000 that you paid out of pocket. All right, and generally there wouldn't be a 1098T. There could be, but a lot of times you don't. All right, so it just depends. All right, sometimes the college won't issue one for if you're beyond the 4-year mark. Okay, but that's what the Lifetime Learning Credit is for. All right. Okay, you cannot take both credits for the same student in the same year. That's on page 637. All right. Okay, that ends this discussion of the American Opportunity Credit and the Lifetime Learning Credit.